Preparing for a FP&A analyst at Adidas interview, you've reached Candy Mentor, and this video is for you. We'll walk through 20 key questions you're likely to face. For each question, you'll see a sample answer followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. Why do you want to work in FP&A at Adidas? I want Adidas because FP&A here connects finance directly with products, markets, and consumer behavior. The business combines global scale with fast-moving launches, wholesale relationships, direct-to-consumer growth, and meaningful currency exposure. I would enjoy translating sales and margin data into decisions on inventory, pricing, marketing, and channel investment. I also value the opportunity to work cross-functionally with commercial teams while maintaining financial discipline and learning how a global brand turns strategy into measurable performance. While answering, connect your interest in financial planning, commercial analysis, and the sportswear industry with Adidas's global brand, product cycles, regional complexity, and need for disciplined, data-driven decision-making. Question 2. What does FP&A contribute to a global company like Adidas? FP&A provides the forward-looking financial view that helps leaders allocate resources and respond to changing conditions. At Adidas, that could mean forecasting demand by market and channel, assessing product profitability, monitoring marketing returns, and identifying risks in inventory or foreign exchange. The role is not simply reporting actuals, it explains what happened, predicts what may happen next, and recommends actions. Strong FP&A connects commercial strategy with realistic financial outcomes and accountability. Make sure to cover budgeting, forecasting, performance reporting, business partnering, scenario analysis, resource allocation, and how FP&A turns operational information into decisions for markets, channels, and product categories. Question 3. Walk me through how you would build an annual budget for Adidas. I would begin with strategic targets and historical performance, then build operating assumptions by market, channel, category, and major cost line. Revenue would reflect volume, price, product mix, launches, and distribution changes. Gross margin would incorporate sourcing, markdowns, freight, and currency. I would gather bottom-up inputs from commercial and functional teams, challenge inconsistencies, consolidate the plan, and run scenarios. Finally, I would document assumptions, secure approvals, and establish monthly tracking against the budget. In your answer, talk about strategic assumptions, historical trends, bottom-up inputs, revenue drivers, gross margin, operating expenses, working capital, foreign exchange, review cycles, and alignment between regional and global plans. Question 4. How would you forecast Adidas revenue? I would forecast revenue using a driver-based model rather than applying one broad growth rate. For each region and channel, I would estimate units, average selling price, product mix, launch timing, seasonality, and promotional activity. Wholesale would incorporate order books and retailer visibility, while DTC would consider traffic, conversion, basket size, and store productivity. I would compare the forecast with historical patterns and commercial commentary, then stress-test assumptions for weaker demand or delayed launches. Be sure to mention channel and regional segmentation, units, average selling price, product launches, seasonality, wholesale orders, DTC traffic and conversion, promotions, foreign exchange, and triangulation against market intelligence. Question 5. How would you analyze a revenue miss versus forecast? I would first quantify the miss by region, channel, category, and month, then bridge it into volume, price, mix, timing, and currency effects. I would check whether wholesale orders slipped, DTC traffic or conversion weakened, launches underperformed, or inventory constrained availability. Next, I would separate timing from a genuine demand issue and validate conclusions with commercial partners. My output would include a revised forecast, key risks, and actions such as pricing, inventory reallocation, or marketing changes. Focus on decomposing the variance into volume, price, mix, timing, currency, channel, region, and product drivers, then distinguish temporary timing issues from structural problems and recommend corrective actions. Question 6. What is a sales and gross margin bridge, and how would you use it? A bridge explains how a financial result moved from a starting point to an ending point. For Adidas, I might bridge gross profit from budget to actual through revenue volume, price, product mix, currency, sourcing costs, freight, markdowns, and other cost changes. I would show both absolute and percentage impacts, identify controllable versus external drivers, and reconcile the bridge to reported numbers. This makes performance understandable and highlights where commercial or operational action can improve margin. While answering, explain opening to closing performance, volume, price, mix, currency, sourcing, freight, markdowns, and other cost effects, emphasizing how a bridge supports accountability and management decisions. Question 7. How would you forecast gross margin for a sportswear business? I would forecast gross margin through its underlying drivers rather than extrapolating the prior percentage. I would assess product and channel mix, pricing, promotional intensity, expected markdowns, sourcing costs, freight, duties, and currency. Inventory age and sell-through would be important because excess stock can pressure future margin. I would compare the model with current orders and market conditions, then present a base case, downside case, and specific actions to protect profitability. Mention product mix, pricing, promotions, markdown risk, sourcing costs, freight, duties, currency, channel mix, inventory age, and the need to compare standard assumptions with current commercial evidence. Question 8. How would you analyze inventory at Adidas? I would examine inventory by product category, region, channel, and age, linking balances to demand forecasts and expected sell-through. Key measures would include weeks of supply, inventory turns, availability, aged stock, and markdown exposure. I would investigate whether excess inventory reflects weak demand, delayed launches, or poor allocation, while also checking whether shortages are limiting sales. The recommendation might involve reallocating product, adjusting future orders, changing promotions, or accepting selective markdowns to release cash. In your answer, cover inventory by category, region, and channel, sell-through, weeks of supply, aging, demand forecasts, availability, obsolescence, markdown exposure, working capital, and trade-offs between service levels and cash. Question 9. What KPIs would you monitor for Adidas FP&A? I would monitor KPIs across growth, profitability, working capital, and execution. These would include net sales growth, gross margin, full price sell-through, markdown rate, inventory turns, weeks of supply, DTC growth, wholesale order intake, store productivity, marketing return, operating expense leverage, and cash conversion. I would also track forecast accuracy because a financially attractive plan is less useful if assumptions are consistently unreliable. The right dashboard should combine leading indicators with reported financial outcomes. Be sure to include net sales, gross margin, sell-through, inventory turns, weeks of supply, DTC growth, wholesale order intake, marketing efficiency, operating expense leverage, cash conversion, and forecast accuracy. Question 10. How would you explain a favorable expense variance that may not actually be good news? I would avoid labeling the variance favorable until I understood its cause. Lower marketing expense, for example, could reflect genuine savings, but it might also indicate a delayed campaign, missing accrual, or underinvestment that will hurt future demand. I would compare actuals with commitments, timing, prior periods, and the operating plan, then speak with the budget owner. My commentary would distinguish sustainable efficiency from timing or execution risk and update the outlook accordingly. Make sure to distinguish timing, underspending, accrual reversals, vacancies, delayed initiatives, and genuine efficiency, while checking whether the variance creates future risk or reflects incomplete execution. Question 11. How would you evaluate the profitability of DTC versus wholesale? I would compare channels using contribution economics, not just reported revenue or gross margin. DTC may achieve higher selling prices but incur fulfillment, returns, store, technology, and customer acquisition costs. Wholesale may have lower margin but greater volume, simpler fulfillment, and different working capital characteristics. I would calculate contribution profit by channel, analyze customer and product mix, and consider strategic value such as brand reach. That creates a more balanced basis for investment and channel decisions. Focus on revenue quality, gross margin, discounts, returns, fulfillment, store and digital costs, retailer economics, working capital, customer acquisition, and contribution profit rather than comparing reported sales alone. Question 12. How would foreign exchange affect Adidas's forecast? I would separate translation from transaction exposure. Translation affects the conversion of local market results into the reporting currency, while transaction exposure can affect product costs, intercompany flows, and margins when selling and sourcing currencies differ. I would forecast performance in local currency first, apply approved exchange rate assumptions, and show the reported impact separately. I would also consider hedging where relevant and explain whether an apparent growth or margin change reflects business performance or currency movement. In your answer, distinguish transaction and translation effects, explain local currency versus reported growth, address sourcing and selling currencies, hedging assumptions, and show how FX can affect revenue, margin, and expenses. Question 13. Describe your approach to monthly actual versus budget reporting. After the close, I would validate the data, reconcile key totals to the general ledger, and compare actuals with budget, forecast, and prior year. I would prioritize material variances and explain them through operational drivers rather than repeating account descriptions. I would review commentary with budget owners, distinguish timing from permanent changes, and update the forecast where needed. The final pack should be accurate, concise, and decision-oriented, with clear owners and follow-up actions. Talk about data validation, close timing, variance thresholds, business driver analysis, concise commentary, stakeholder review, forecast updates, and ensuring reported insights reconcile to the general ledger. Question 14. Tell me about a time you improved a financial reporting process. In a previous role, reporting required manually combining several files, which created delays and version control risk. I mapped the process, standardized input templates, added validation checks, and automated recurring calculations with spreadsheet tools. I then documented the workflow and tested it with users before implementation. The result was a shorter reporting cycle, fewer formula errors, and more time for analysis. I would bring the same practical mindset to Adidas while respecting data controls and stakeholder requirements. Be sure to structure the example using situation, problem, action, and result, highlighting automation, standardization, control improvements, stakeholder adoption, measurable time savings, and better decision quality. Question 15. How would you build a scenario analysis for weaker consumer demand? I would start with a base forecast and flex the main demand drivers: units, average selling price, product mix, channel growth, sell-through, markdowns, and inventory. In a downside case, I would model lower volume, higher promotions, slower collections, and possible expense responses while preserving realistic operational constraints. I would quantify effects on revenue, gross profit, operating income, and cash, then identify trigger points. Management would receive both the scenarios and actions available under each outcome. Mention explicit assumptions for volume, price, mix, markdowns, inventory, marketing, expenses, cash, and timing. Then compare base, downside, and upside cases with trigger points and management actions. Question 16. How would you assess whether a marketing campaign is financially successful? I would evaluate incremental contribution rather than campaign-attributed sales alone. First, I would establish a baseline using comparable periods, markets, or customer groups, then measure incremental revenue, gross profit, customer acquisition, conversion, full price sell-through, and repeat purchases. I would deduct media, agency, promotional, fulfillment, and return costs where relevant. I would also consider brand building effects but clearly separate short-term financial return from longer-term strategic value and acknowledge attribution limitations. Focus on incremental sales, gross profit, customer acquisition, full price sell-through, channel effects, timing, attribution, repeat behavior, and return on investment after all relevant campaign and fulfillment costs. Question 17. How would you handle conflicting numbers from finance and a commercial team? I would treat the disagreement as a data and definition issue before assuming anyone is wrong. I would clarify the metric, period, currency, channel scope, and source systems, then reconcile the figures line by line. I would listen to the commercial team's operational context and explain finance's methodology transparently. If assumptions remain uncertain, I would present a range and document the agreed basis. The goal is a trusted answer that supports a decision, not winning an argument. In your answer, emphasize listening first, defining metrics, reconciling source data, checking timing and currency, agreeing on assumptions, documenting the conclusion, and maintaining partnership without compromising accuracy. Question 18. What Excel or analytical tools would you use in an Adidas FP&A role? I would use Excel for structured analysis, including pivot tables, SUMIFs, lookups, scenario drivers, variance bridges, and reconciliation checks. For recurring datasets, I would use Power Query or an equivalent preparation tool to reduce manual handling, and dashboard software when stakeholders need interactive views. I focus on transparent formulas, input controls, version discipline, and documented assumptions. Tools should make analysis faster and more reliable, not create an opaque model that only one person can maintain. Mention pivot tables, lookups, SUMIFs, data validation, scenario drivers, Power Query or equivalent tools, dashboarding, reconciliations, documentation, and careful controls over large, recurring datasets. Question 19. How would you prioritize competing requests from senior stakeholders? I would rank requests by decision impact, deadline, materiality, and dependency on other work. A forecast risk affecting a major market would normally take priority over a low-impact presentation refinement. I would clarify the required decision and minimum useful output, communicate realistic timing, and provide an initial directional view if complete analysis is not yet possible. I would protect critical close and control activities, keep stakeholders updated, and avoid sacrificing accuracy for avoidable urgency. Cover urgency, decision impact, materiality, deadlines, dependencies, data availability, stakeholder communication, and the ability to provide a useful preliminary answer while protecting close and control requirements. Question 20. What would you do in your first 90 days as an Adidas FP&A Analyst? During the first month, I would learn Adidas's business model, planning calendar, reporting definitions, systems, key markets, channels, and stakeholder responsibilities. In the second month, I would independently support recurring reporting, validate data flows, and understand the main revenue, margin, inventory, and expense drivers. By the third month, I would aim to deliver a useful improvement, such as a clearer variance dashboard or automated reconciliation, while building trust through accuracy, responsiveness, and thoughtful business questions. Be sure to mention learning the business model, reporting calendar, chart of accounts, planning tools, KPI, stakeholders, data sources, control environment, and delivering one practical process or insight improvement. If you are still with us, congratulations, you are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.